All right, good morning, everyone. Happy Monday, the 7th of April. Excuse me, morning, Andrew. Morning, GMAC. GMAC's got his 10-gallon hat ready. Good morning, Art, Mirza, Lorna. All right, guys, a little bit more leakage. Leakage on the Wall Street. Bitcoin down about 9%, the RUT down about 3.5%, QQQ futures down about 3%, S&P futures down 2.7, crude oil down 2.6, YM down 2.4, gold up a quarter, and silver up about 3%. So I think we're hitting a couple of extremes here. Uh, we can hit extremes. They won't matter until they matter. Bears have definitely got the edge right now. But one extreme would be looking at the VIX futures. At the high of day today around $40. That puts you about 45% above your daily 21 EMA. Meaning VIX futures have to pull back 50% just for a good, healthy, normal reset. At the same time, with QQQ opening around, we'll call it 410. Down around 410 with a 21 EMA up here around 475, 480. Give or take, we're going to be about 15% below the daily 21 EMA. And then with the spiders, I'm going to open around 490, pretty much the same ballpark, 13, 15% below that daily 21. So again, you are hitting a couple of extremes. VIX pretty overbought markets, very oversold. Won't matter until it matters. For one, take a look at our spreadsheet here. And, clear as day until things change, the Bears have got the edge. QQQ a negative 85 out of 120, S&P's a negative 85. So the indexes are at negative 74% of their strongest score possible. I don't want to jinx it, but they might be at 100% with a gap down here at the open. Big 10 is at negative 67%. All right, Netflix and negative 51, Tesla negative 69. Microsoft's probably going to crack a negative 100. And then you've got gold. So maybe gold can save the entire market. But on the spreadsheet, the Bears have got the clear edge. From a big three signals perspective, S&Ps have a daily, a 4-hour, a 2-hour, a 1-hour, a 30-minute, and they're going to get a 15-minute, 5-minute sell signal. You look at a big name like NVIDIA, they're gapping that down to $89. So now NVIDIA sub $90 stock. They got Meta gapping down to $492, Amazon gapping down to $167. Apple, quite the fall from grace in Apple. What was that? All right, took a little stab on a silver short. I'll take a little paycheck. But Apple, quite the fall from grace. Apple going to open around $1.83. So point of being, all the edge. And we can look at things that usually matter, like an overbought VIX or a very oversold market. They won't matter until they matter. Meaning, we get one tweet, we get one piece of good news on the trade war side of things that could kick off a really, really big bounce. Thing we got to keep in mind is, in my opinion, for the market to potentially turn the corner, might be all she wrote as far as a big flush. I'd want to look for 2 closes back above the daily 21 EMA. Right, so you flush, big pop. Back there, they only got one. One close back above your 21, and then right back on down she goes. If they can do that, 2 closes back above the daily 21 EMA, then they can try to stabilize the price. Then they can rebuild. Maybe at that point, that's all she wrote. We're at a point, guys, where if the QQQ and the S&Ps are going to do that today, we're talking about like a 15 to 20% pop. So understand the market you're working with. We're not at a point where the S&Ps and QQQ can go, 2, 3, 4, 5% higher, and then all the problems are fixed. We got better structure. We're getting a bunch of buy signals. They could pop 10, 15% today. Nothing about the structure would actually change. But with all that being said, um, I don't think you want to jump in at the open and just blindly buy a bunch of puts. Bull market, bear market, over bought market, over sold market. We always want to do a good job of picking our spots wisely. So my thinking is for now, whether it be long, whether it be short, whether it's a 15-minute, 30-minute, 1 hour squeeze, into the open, I'm thinking day trade. If they want to take the S&Ps down to 490, 485, we can try to day trade that flush lower. If we get better internals and the VIX is pulling back, any kind of pop higher, we can day trade that pop. Now, put a gun to my head, tell me to take a swing trade, I got to get short. I don't love the idea of getting swing short, meaning I'm going to buy a bunch of puts and I'm taking them to bed tonight. I don't love the idea when we could gap up 5, 10, 15%. And in my spreadsheet and the indicators will still tell me to get short. So really think about that. Usually you get short and the thing pops 10, 15%. It's no longer going to be a good looking short. I think S&Ps are a good looking short up into 575-ish. So we gap down, got a bunch of sell signals. I jump in and buy a bunch of puts for a swing trade. I could get totally ran over on a tiny, tiny little pop. So I'm thinking day traded for now, long and short. And then where I would like to come in and buy some puts for a swing trade, that could be the first bounce into the 30-minute or hourly 21 EMA. Which, we're we're at a point where even a pop into a 30-minute hourly 21, it's going to be a big pop. Let me do a little math here, a little calculation. If the S&Ps open at 495, they open at 495. Let's just assume we'll have the hourly 21 around 530. What kind of pop would it take for a bounce back into a falling 21? Not on the weekly chart, not on the daily chart, on the hourly. That'd take about a 7% pop. Again, pick your spots wisely. Gap it down, you buy a bunch of puts. They could pop the thing 5, 6, 7%. It doesn't fix all the issues. You're not back into a bull market. It's a kickback to an hourly 21. So I'm thinking day trade it for now, and then on a pop into, it could even be a 15-minute 21. That might only require a 3% pop. But that's my thinking, guys. If they want to keep on dumping the market, I'll find a spot to short it for a day trade. They want to kick off a short squeeze push back to an hourly 21. I'll find a spot to buy it for a day trade. Pop into an hourly 21, get rejected. Then I think I come and look for some puts for a swing. Alrighty. And then the pre-market squeeze watch list. Nothing A plus here on the futures. Let's see. All right, couple neutral squeezes for gold futures. Hourly 30-minute 15. And then 30-minute on the silver, gold futures, the RUT, and the YM. 15-minute Bitcoin, 15-minute silver, gold, the RUT. And then 5-minute YM, crude oil, ES, RTY, and NQ. All right, so anchoring to the S&Ps and Qs here. Not even for a trade idea, but more of a gauge of direction. Watch that 5-minute squeeze here into the open. Not too bad of a 5-minute. 11 points out of 15, bull structure. They go get in the 5-minute buy signal, turn that into an A plus squeeze. Those are the kinds of spots I'm looking for a long. All right, I'm coming in and I'm going to buy a June expiration call. I'm calling for a bottom and I'm looking for a big swing trade. Can I jump into a 5-minute squeeze, right? Buy it around 50.15, sell it around 50.60. Right, not a home run. I'm not going to retire off that trade, but it's a good base hit. All right, so watch the 5-minute ES, watch the 5-minute NQ. Maybe for a trade, maybe as a gauge of direction. And then the cash markets. They're probably going to fire the 15 minutes here at the open. So those might be irrelevant. 15-minute on Amazon, Nvidia, Meta, TSM, Google, Netflix, and Microsoft. Uh, they're probably going to fire here at the open. And then one more thing to be mindful of. Across a few of the bigger weekly charts and daily charts, you do have some squeezes that just fired short. You got the NQ daily squeeze that just broke short 2 candles ago. And it'll take a really, really, really big pop, I think, to keep that daily squeeze from trying to take things lower. They can pop it into 18,000, get rejected, then get continuation back towards the downside. To make things a little bit more interesting, some squeeze on squeeze action. They've also fired a weekly squeeze short. And then S&P futures, same combo. Daily squeeze broke short, weekly squeeze broke short. And then a few of your Big Ten names, Nvidia, daily squeeze and a weekly squeeze broke short. And we've got that weekly squeeze target around, call it 85 to $80. So they could pop it into 95, they could pop it into 100. Doesn't change about the structure. Mighty awesome. We've got Microsoft with a weekly squeeze breaking short and I believe a daily squeeze. All right, build up all the energy and then release all the energy. Till they can change a picture and they're back above the 21 and they're canceling sell signals, improving structure, improving momentum. When these bigger squeezes break short, they want to keep on taking things lower. So Microsoft's got one, Nvidia had a few, QQQ fired, S&P's fired. Nasty squeeze action. But all right, y'all, that is what I got for you this morning. I'm not looking to run scans right now. I'm not looking to play the stock pickers game. S&P, QQQ focus, day trade focus. Keep on keeping on in we'll call it interesting market. I do hope that makes sense, though. If everything is so bearish and the market's breaking down, we got sell signals, VIX is exploding, why wouldn't I want to wake up and just buy a put for a swing trade? I wanna pick my spots wisely. Now, for all I know, the S&Ps go down another 5, 10, 15% this week. But from a probabilities perspective, when the indexes are 15% below their daily 21 EMA, and the VIX futures are 45% above their daily 21 EMA, I don't think probabilities-wise it's a great spot to wake up, buy a bunch of puts, take them to bed. Could that work today? Could that work this week? 100%. Can that be a career-building trade? In my opinion, I don't think so. So day trade it. They dump it another $200, $300, $400. Short every pop into a 5-minute 21, get short in every 5-minute, 15-minute squeeze. You shall get your piece. All right, Bitcoin. Looking at a Bitcoin, you are in a daily squeeze and you're also in a weekly squeeze. And we can look at it and think, man, they've really beaten it down. It's very oversold. No way Bitcoin goes lower. We're kind of in the opposite of where we were back here. Big weekly squeeze, finally breaks long. And I bet you around 85 to 90K. You had a few folks thinking, Bitcoin can't go any higher. Too overbought, too extended, got to pull back. You can't ignore the squeeze. Building up all the energy. When the squeeze fires, overbought turns into really overbought, can really give you that big outsized move. So I can't look at Bitcoin and think, yeah, no way it can go lower. If they fire both a daily squeeze and a weekly squeeze short, Bitcoin can head back down to 65 to 55K. So all keep in mind, guys, from a spreadsheet, a structure, a signal, a squeeze perspective, very clearly path of least resistance is to the downside. When you factor in the fact you have the S&Ps, QQQs, Microsoft's, Nvidia's, all just firing big daily, weekly squeezes short. Yeah, it's a market that could keep on going much, much lower. Then you factor in the fact that we're going to be 15 plus percent away from home base. You could wake up to it. You could wake up to anything. In the blink of an eye, QQQ is up 5, 6, 10%. Nvidia's up 10, 12, 15%. And I do think we're going to eventually get a day like that. I think we'll have to have a catalyst for it, but it shall happen eventually. But all right, y'all, any questions for me? Any chart requests? Anything you want to take a look at? Drop it into chat. And I got about 10, 15 minutes here to hang out. Hey, good morning, Debbie. Good morning, good morning. Good morning, TPS reports. T with a capital. Yeah, order, bro. Great question there. So can I explain what a weekly squeeze breaking short means? Yeah, really good question. So when a stock goes into a squeeze, and that could be on a 5-minute time frame, could be a 30-minute or a weekly, think of that like a buildup of energy. So a good example might be like a coiled spring. So NQ back here goes into a weekly squeeze when we get our first blue dot. First blue dot on the squeeze histogram. Now we're in a squeeze. We're going through that compression phase. Right, everything's contracting. The average true range, the volume, everything getting coiled like a big spring. That compression eventually leads to expansion. Right, all the built-up energy gets released. The spring finally goes boom. When we get the first green dot on the squeeze histogram, that the squeeze is finally fired. So if we look at an example like Apple from Q4 of last year, all right, we get the first blue dot. We have entered a weekly squeeze. We are building up the energy. Then we get our first green dot, and on this example, the squeeze fired long. Hanging out near that 21 EMA, all the energy getting built up, and then boom. Squeeze fires, breaks out, takes you into higher highs. So when we talk about a squeeze breaking short, it's just the opposite. They entered that compression phase, built up all the energy, and then unlike the Apple weekly example, the squeeze goes and breaks short. All that pent-up energy gets released in the form of a big flush lower. And especially across these bigger time frames, when the squeezes fire, they can make for really big outsized moves. So hope that makes sense for you there, my friend. And then Glenda, am I in the futures? Yeah, so these are the QQQ futures, the NQ. And if we look at the cash QQQ, you'll see a handful of weekly squeezes. We had one back in, when was that? November of 2023. That one fired long. Pulls back into a brand new weekly squeeze. That one fired long. Pulls back into another weekly squeeze. That one fired long. And now a change in tempo for you. Pulls back, prints another weekly squeeze. That one goes and breaks short. So we got a few breaking short in both the futures products and the cash products. Good morning, Tony, and then good morning, Muhammad. Yeah, the rut. Yeah, another example, right? Pull back, weekly squeeze, and kerplump. I want to say the SMH fired short. Yeah, that one officially fired short back on last week's candle. Nasty, nasty, nasty. Yeah, TPS supports. We can go take a look here at gold. Another good example of that weekly squeeze. Let me clean things up here. Nice weekly squeeze back here. Broke long. Kicks off the push. Bit of a flush here last week, but nothing really out of the ordinary. You get the initial push. You pull back to your 21. A little back and forth, and you kick off another nice leg higher. and you're pushing, pull back, right back to that 21. So now the key is number one, can they keep it above that 21 EMA? We'll call 279 and change. And then number two, can we get a buy trigger to buy it? So I would look for above that daily 21 EMA, fresh 15-minute buy signal, fresh 30-minute buy signal, maybe catch it on a 15-minute, 30-minute squeeze. But hey, gold is number one by far. Between the indexes, between the Big Ten, and between the sector names, it's the only thing here with a positive score. That being said, you have dropped off a little bit. Go back 1, 2, 3 weeks ago, gold had 100 points out of 120. Few times gold had a perfect 120. Now you're dropping down to a 54. And I think going from a 100 down to a 54 might just be telling us gold's a little bit tuckered out. Not bearish, no major issues, but it gave you a good push, had a big breakout, fired a big weekly squeeze. Gold might need a little time here to catch its breath. While catching its breath, if they can keep it above that daily 21, that should be your neighborhood where you find your next good entry. Now, even with gold, I would lean a little bit more towards day trade it. The action we had back on Friday, I think a really good reminder. The benefit of day trading the current market. You can find the perfect setup, bunch of buy signals in a good relative strength name. That would have been silver from Wednesday. Right, so had they put a gun to my head back on Wednesday, it forced me to buy what I thought was the best swing trading setup, it would have been a silver. Right, beautiful 3-day squeeze. Number one on the big three sheet. You buy that relative strength name for a swing trade. You wake up on Thursday morning and you're not going to love the action. I don't think a silver issue. I think the market we're in. Distribution. But yeah, gold is at the spot. If they can hold the spot and give you a few buy triggers, she might keep on trucking. yeah. People might have to sell their gold to pay off the margin calls. Exactly. But all right, my good friends, I shall let you go here. For those of you in my room, in the main room, I will catch you in about 10 minutes here for the open. And yeah, for the rest of y'all, day trade. It's my best piece of advice. If we get the short squeeze of the ages today, right, S&P's QQQ up 4-5+%, day trade it. You could even be a little bit late to the party. You're still going to find a nice chunk of that move. If they want to take QQQ down to 16,000 today, day trade it. I want to get swing short, but I want to get swing short on a pop. And that could be a pop into a 30-minute 21 EMA. It could be a pop into an hourly 21 EMA. Just something where they've worked off a little bit of that oversold juice. And then I've got the proof of, okay, they've popped and pop changes nothing. If they pop and the pop changes everything, I think a little bit unlikely, but tomorrow morning NQ's back to 22,000. All right, I'll hold off on shorting that pop. Anything other than a pop that fixes all of the structure issues, the signal issues, I think that makes for your next ideal swing entry. But all right, y'all, thank you again. Have a great Monday. Have a great week. I'm back with you same time, same channel on Wednesday morning, and I will talk to you then. Adios.